Hi there, Jeff. We are keeping track of what's happening with HSBC. The shares are traded in Hong Kong in the afternoon session, down about 2.5%. So hovering near the intraday low. This is in response to the latest report card that came out just about 2 hours ago. Now, pre-tax profit for the third quarter was down 18%. This is a miss. $4.8 billion. Revenues down 3% to $13.4 billion. But what was notable was that they saw some outperformance and resilience in the Asian market. Pre-tax profit in Asia was up 4% to $4.7 billion. And as I mentioned, the company indicated that there was resilience in the Hong Kong market. Parts of the business, they said, especially Asia, held up well. Some parts, though, the performance are not acceptable, namely continental Europe, the non-ring-fenced bank in the UK, as well as the United States. We got a chance to speak to the company's CFO, EWEN STEVENSON, and this is what he had to say about the report card.
I think things went so wrong. I think the headline was obviously disappointing for us, but if you unpick that, I think a very resilient performance in Asia. Profits were up Q3 on Q3. We're pretty pleased with the performance we did on costs. But behind that, we had some very high one-offs, particularly things like UK conduct costs. We also had continued weakness in our non-ring-fence bank and in the US, and a relatively weak quarterly performance from our global markets business within global banking and markets.
So looking at the earnings by geography, it was Asia that was most notable, the only area seeing growth on a pre-tax level, up 5% on year to $4.7 billion. This region, or this part of the world, making up 83% of pre-tax profits. And of course, Hong Kong was resilient, the bank said. This is despite 21 weeks of civil and political unrest in the territory. When we put the question to EWEN about what he anticipates, whether or not he expects this to be a drag going forward on the earnings.
We've got two things going on in Hong Kong at the moment. We've obviously got the ongoing trade dispute between US and China and the ongoing protests, both of which are impacting the business. You can see that in the underlying macro data in the economy. Trade numbers are down, tourism down, etc. But overall, we're pretty pleased with the way that Hong Kong's continuing to perform for us.
There were some media reports about potential cost cuts and some layoffs. We asked him whether or not he could confirm there would be layoffs amounting to 10,000, and he did not comment on that. Asked him about the share buyback. They completed a $1 billion share buyback so far this financial year. I asked him whether or not they are going to be announcing any further similar plans, and he said that should be it for the remainder of the year. The outlook is the revenue environment is more challenging than in the first half. And the outlook for revenue growth is softer than expected, and they are not expecting to achieve their 2020 return on tangible equity target of more than 11%. So we are going to be, of course, continuing to track HSBC shares on the back of the latest quarterly results. The company declaring a dividend of 30 US cents per share. Back to you guys.
Hi, I'm Joanna Bersecci, and thank you for watching. You can check out more of our videos by clicking on the boxes on the screen. And don't forget to subscribe to our channel for more from CNBC International. Thank you for watching.